Welcome to FundaTech Insights, the show where we take complex market stories, sprinkle in some caffeine, and hope it all makes sense by the end. I'm our host and the person who pretends not to panic when tech stocks drop faster than my confidence on leg day.
And I'm Maddie, your resident analyst who spends more time with financial statements than with actual people, which probably explains why I get unusually excited by revenue guidance.
Speaking of excitement or panic, depending on your portfolio, today we're talking about Palantir Technologies, ticker PLTR. You know, the company with government contracts, AI tools, in a fan base that treats every earnings report like a Marvel movie premiere.
Absolutely. Palantir is this fascinating hybrid between an enterprise software powerhouse and a national security sidekick. They run platforms like Gotham for government operations, Foundry for enterprise data, and now AIP, their AI operating system, which is basically their rocket fuel for 2025.
And the stock has been, shall we say, dramatic?
Oh, yes. Recently, the stock traded around a spicy $172 after taking a roughly 6.5% dip, which for Palantir is basically a Tuesday. Despite the volatility, the company is massive now, sitting at around a $410 billion market cap and trading about 60 million shares daily. People cannot stop touching this stock.
It really went from interesting software company to I will fight you on Twitter over this ticker in record time.
Right? And part of that is because the catalysts have been huge this year. Their Q3 2025 earnings were a complete blowout, $1.18 billion in revenue and 21 cents EPS. They didn't just beat estimates, they drop-kicked them. Then they raised full-year revenue guidance to around $4.4 billion. For context, that's the corporate equivalent of walking into a meeting and saying, "Yes, I am that good."
And of course, there's the military and government side. Big contracts with the US, the UK, and that NVIDIA partnership that sent everyone on X into a frenzy.
Yep, although it's not all sunshine. There's a lawsuit where Palantir accused former employees of stealing code to start a competing AI firm. Not a deal breaker, but definitely something investors are watching.
Okay, that's the fundamental picture. But let's talk charts, because I know you've been staring at them like they're the Zapruder film.
So, technically, Palantir is still in a long-term uptrend. The price sits well above the 200-day moving average, which is around the mid-130s. Shorter term, though, it's been choppy. The 20 and 50-day averages are up in the high 170s and low 180s, and that area has become a messy resistance zone. If the stock can break through the 182 to 194 band, it could take another swing at its highs around $207. On the downside, that 170 to 175 area is really the short-term floor everyone's watching.
So the chart is doing that I might break out, I might break down, keep refreshing your app every 10 minutes thing.
Exactly. And the analysts? Oh boy, they are hilariously split. The consensus is basically a shrug, a hold rating, because some analysts think the stock should be $18 and others think it should be $255. The average sits around the 160 to 180 range, which ironically is right where the stock is now.
It's like they all got different homework assignments.
Pretty much. Then you look at retail sentiment, and it's a whole different world. Reddit loves this stock. Half the posts are PLTR to the moon, and the other half are people having emotional breakdowns over resistance levels. But here's the kicker. Short interest is really low, only 2 to 3%. So despite the meme stock energy, it's not set up for a GameStop-style short squeeze. The drama's mostly emotional, not mechanical.
So to sum it up, massive growth, massive expectations, massive Twitter arguments, and a chart that needs therapy.
Pretty much. Fundamentally strong, full of AI momentum, but definitely expensive and very sentiment-driven.
That's all for today's FundaTech Insights.
Remember, folks, this isn't financial advice, just mildly entertaining market therapy. Catch us next week when Maddie explains about next stock. Till then, take care of yourself, bye-bye, and keep investing.